Good morning, afternoon, everybody. We are at the end of July 31st, market update today. So I think it's important to address what's been going on this week and really over the last couple because we've seen interest rates climb. The Fed did hold rates steady, but that doesn't mean that interest rates haven't risen. There are a lot of factors playing into it all right now. This last week, PCE numbers came out. We're at 3.3% year over year. As I'm sure you've read in the headline news, the Fed wants to keep that at about 2%. So it's definitely higher than their target number. And that is stoking inflation fears. The Fed voted this week, and when they did, it was 9-3 to keep rates steady. But that means there were three dissenters voting for an immediate rate hike, which means it is definitely on the table for the next September meeting. And the markets are actually pricing in a 60% chance that the Fed will raise rates at that point. That could cause problems for mortgage rates. You know, if the Fed does raise rates, it could help tame some other inflationary aspects, but it's not going to bring down the price of oil. So that's still all centered around Iran and the conflict there. And we don't know what's going to happen with that. It seems to ebb and flow every week, and the markets live and die on what's happening with a ceasefire or not a ceasefire, and if there's still action happening. So it's really a time, again, to make your decisions, make your plans. Let's work through pre-approvals, figure out a true financial analysis, and not just shop for an interest rate with somebody who's not going to continue to update you on what's happening and come up with strategies on how to make you a successful homeowner. I've seen this happen where the Fed raises rates and then mortgage rates fall because it actually helps the inflationary outlook. And it doesn't seem like that's going to happen this time around. So if they do raise, we're probably looking at higher interest rates. But if it does make inflation better, interest rates come down, one of two things is going to happen. One, like I said, Fed raises their rate, mortgage rates go up, and affordability isn't what we want it to be. Two, Fed raises rates, it brings interest rates down. The war in Iran has another ceasefire, it stops, they come to some kind of agreement, oil prices come down, inflation isn't as big of a problem, rates come down. What happens when rates come down? More buyers want to buy, just like if you're a realtor, your buyers are in the market right now. When that happens and prices go up, you might get a lower interest rate, but they're still paying the same, if not more, than they are with rates in today's environment right now. So it's still the right time to make a plan. Homes are on a Groupon until we're starting to see 5% interest rates again. So let's get everybody ready and have a real conversation about what this means.